Hey, this will be the weekly review of the Warrior charts sent out by BullWarriorStocks.com for the week of April 12th of 2010. If you're not familiar with this or not signed up for the newsletter, what we do is every week select 5 different charts in 5 separate categories, and then every Friday try to come back and go over them, win, lose, or draw. And like I said, if you are not signed up for the newsletter, this is the email, what it looks like, and we send out each week. So if you were to sign up, this is what you would see. And then right here we have a description of our chart plays, so you could kind of get familiar with what all the different setups are. This week we were watching ZLC, NBG, AERG, TP, GI, and LIWA. So let's just dig in. Our first play was ZLC, and what this was our pattern play, and we had a Fibonacci retracement. If you're not familiar with Fibonacci retracements, I'd encourage you to Google it, and you should find some answers. But what we were looking for was hopefully an entry at the 61.8%, which was at 311. So let's bring up the chart and see how this one did. And real quick, like I said, if you do want to get onto this email or get onto the newsletter and start to get emails like this, all you have to do is go to bullwarriorstocks.com, and we're offering a free ebook when you sign up with the newsletter. So like I said, just bullwarriorstocks.com. Anyways, this blue line here, that's just for my reference point, doesn't mean anything else. So this is what the chart looked like when we sent out the chart, and you can see we had a pullback here. The low right there, it went to 321, so wouldn't have hit our entry. Right there, a low of 323, so wouldn't have gotten in. And then a low right here of 318. So there's a possibility if you had gotten in down here and then flipped it as it popped back up, but from our entry point we were looking for, it never did drop down to that 311 area. So this one was a no play for us on the week. Our next one was NBG, and what we were looking for on this one as our bottom bouncer play was hopefully seeing some follow through. You can see we had a big pullback here. We were looking at a possible pullback entry of 382. The big volume came in, so we were thinking and hoping for a continued move. So let's pull this one up and see what happened here. You can see that we did have a pullback. However, the pullback just kept on going down and never materialized. It tried to get back heading up here, but just couldn't. So this one was a loser for us on the week. Any way you would have played it, it just wouldn't have resulted. Obviously it's hard to make money going long when the stock just keeps going down. So NBG was a loser for us on the week. Our next play was AERG. This was our trend trading play, meaning the trend is up. You look at all these moving averages, it's very clear that everything is firing. The bulls are in charge. So this is one where we gave a couple of possible pullback entries, but these are the ones where you just hop in because the trend's already up. So chances are, hopefully you'll catch the drift, catch the wave, whatever you want to call it, and keep heading up. For this one, we're just going to base an entry on the 10-day, which was at 96 cents on Monday. So we'll go there and check out this one. So this is what the chart looked like when we sent it out. We were looking for an entry right here. Came up here at 96 cents, so you could have hopped in there. Another down day, but the key during these down days is look how volume was decreasing that whole time. That's a good sign. And then we had the big day here where the volume came back in, pushed the price up, and then eventually came up here and hit a high of $1.18. So had you played this, you would have had an opportunity of a 23% window of opportunity, so not too bad. Get in here, hang tight, and then between here and then Thursday there was a 23% move. Now obviously you would have had to have played it perfectly to get that, but still maybe you could have gotten 10-15%, and getting that rate of return on your money for only a couple of days is pretty darn good. So this was a nice winner for us, AERG. Our next one was TPGI, and this one we actually mentioned in our opening email. You can see right here that we said pay close attention to TPGI just due to the nature of the chart. And what I mean by that is if we look at the history, way back in months and months ago, we had a big volume move right around here, and then the stock made this gigantic move, and then all of a sudden we had another big volume bar. So right here, seeing what might occur. So this was just a very unique setup and one that we were pretty bullish on, and that's why we announced it in the opening paragraph. So let's see how this one did for the week. So you can see this is what the chart looked like when we sent it out. And then right here it did break above the highs. Just for simplicity's sake, we'll say let's say you got in at 390, so technically it hasn't even hit 390 yet. But let's say you get on this day at 390, and then watch what happens. This day, but it's not even over yet, eventually went up and hit a high of $5.15 from a 390 entry, and this was all brought upon by seeing this massive volume bar, and then you can see volume precedes price, nice move. So this was a 32% opportunity here. Could have been even more had you gotten in maybe at 385, 386, but from 390 it made a 32% move in only a matter of a couple days. So one of those things where you definitely can't walk into your local bank and get that sort of a rate of return on your money. So this was our big winner for us, and who knows, it might not be over. This was a multi-month move, so I wouldn't be too surprised to see this one maybe get over $6, $7. But for our purpose, this one was a win for us. Our last one was our pending breakout, LIWA. What we were looking for was a breakout of this trend line right here, this downtrend line. So let's go to the chart and see how this one played out. So here was the chart. On Monday, we did get the break, so you would have entered, and then it pulled back. But the thing about this pullback is it never, crossed below any of its moving averages. So it never really gave you any sell signals, and it did pop back up to let you get out if you want. So what we're going to do is just classify this one as a break even. Yes, it wasn't a winner, but at the same time, it wasn't a loser either because it didn't pull back, didn't crash through these moving averages, and did pop back up. So it would have allowed you to at least sell for break even, or depending on where you got in, or if you averaged down some, you might have been able to turn a profit here. But for our argument's sake, we're just going to say break even. Once again, it didn't cross below any of these key moving averages, and it did head back up here. So you would have at least been able to get out break even had you gotten in on the breakout area. So that wraps up the week. We had the two winners. We had a no play, a break even, and a loser. So overall a good week because if you would have cut your losses on all the losers or break evens, so let's say you took a loss on this one, but if you would have managed it properly, took a small loss, if you would have taken a loss on NBG, and maybe let's say even ZLC you took a loss on, between AERG and TPGI, one 23%, the other 32%, you could have still ended up way in the green for the week. So that's why money management is so important to trading, because you want to keep your losses small and then capitalize on the big movers. So overall, it was a good week, and like we were saying, once more, bullwarriorstocks.com. Go there, sign up for the newsletter, and you will start to receive these emails. They go out every Saturday morning. So if you're not signed up, we hope you will. If you do have any other questions on any of the charts or the newsletter, please let us know. If not, thanks for listening, and enjoy your weekends.